Welcome, dear students. Let me introduce myself. I am B.Rjeshwari, JL in Commerce from Tsrjc Survey. And I thank TREI Society for giving me this wonderful opportunity to teach you all a topic, depreciation. Okay. First and foremost, I would like to tell you that this term, depreciation, is not new to you all. Already you have come across this term in intermediate first year while you are learning the final accounts. Okay, one of the adjustments in final accounts while we are preparing final accounts. Okay, now today we are going to see why the depreciation will come, why we supposed to calculate depreciation, what do we mean by the term depreciation. Okay, so first let me give you the chapter outline. Okay, here I gave problem models. Okay, now we are going to learn what is depreciation, what are related terms, depletion, amortization, and obsolescence. What are the causes of depreciation? What are the objectives of charging depreciation? What are the factors affecting the amount of depreciation? What are the relevant accounting principles, methods of providing allocation of depreciation? These are we are going to discuss in this class today. Okay. Okay. Depreciation. Depreciation means decrease in the value of fixed assets. Okay, value of fixed assets due to use in business, passage of time, obsolescence. Okay. Obsolescence in the sense out of date. Okay, due to improvement in technology or depreciation. As per AS6, depreciation is a measure of the wearing out, consumption or other loss of value of a depreciable asset arising from use, affliction of time or obsolescence through technology and market changes. Okay, here depreciation is how we will measure wearing out. Consumption of other loss of value of a depreciable asset arising from use, continuous we are using any asset, it will decrease the value. Okay, obsolescence means out of date, outdated technology and market changes. Okay, depreciation is allocated so as to charge a fair proportion of the depreciable amount in each accounting period during the accepted useful life of the asset. We will allocate the depreciation every year. Okay, charge in a particular asset, tangible fixed asset, we will charge depreciation. Okay, depreciation includes amortization of assets whose useful life is predetermined. We already know that asset lifetime of the asset, we will measure that lifetime of an asset and we will charge depreciation as per the lifetime of the asset. Depreciable asset. Depreciable assets are assets which are accepted to be used during more than one accounting period. Okay, we will estimate the lifetime of the asset. Okay, are expected to be used during more than one accounting period, having a limited useful life. Every asset will have lifetime. Okay, limited useful lifetime are here by an enterprise for use in the production or supply of goods and services, for rental to others, or for administrative purposes and not for the purpose of sale in the ordinary course of business. Okay, this is the depreciation is the continuous process. As long as the asset will be there, we will charge depreciation. Okay. Some important. Okay. Okay. The word depreciation is derived from the word D means depreciation. D means decrease. Precium means value. Okay, price or value. When there is a gradual decrease in the fall of any asset, which is only on the tangible fixed assets. Tangible means we can feel that asset. For example, plant and machinery, buildings, like tangible fixed assets, we will charge depreciation. Tangible fixed assets are those assets which have certain physical existence. For example, plant and machinery, all these assets in business for production purpose. We will use these assets for production purpose. For rendering services, slowly they decrease in their value. Okay, year by year, the assets value will be decreased. Gradually, when they decrease in the value of asset, we call it as declining the value of asset. Okay, here some important terms are there in depreciation chapter. We can new terms. Okay, depletion. Depletion means the term depletion is the loss of natural resources, mineral wealth due to the constant extraction of raw materials from mines, quarries, oil wells, etc. Okay, depletion means, for example, mining business. We will extract materials continuously. Continuously, we will extract that minerals. Okay, we will say for that we can't say depreciation. We will say that the term depletion of the mineral resources. Okay, here we say not depreciation, we will say depletion. Depletion means continuous extracting of minerals from mines. Okay, amortization. What is amortization? Refers to the economic deterioration of intangible assets and a continuous decrease in the value of intangible assets. Okay, intangible assets, for example, goodwill, patents, trademarks, copyrights. Okay, goodwill is the name and fame of the company. Okay, patents, all these intangible assets also will decrease in their value. It is a practice to write off the intangible assets over a reasonable period. When a part of an intangible asset is written off, it is called amortization. Okay, amortization. Amortization means economic deterioration, economic decrease in the goodwill, patents, trademark, copyrights, etc. It is a practice to write off the intangible assets over a reasonable period when a part of an intangible asset is written off. It is called amortization. This is a new word in depreciation for the intangible assets. Okay, what is obsolescence? Obsolescence in the sense refers to economic deterioration of the assets due to change in technology, invention of improved equipment, market decline due to change in taste and fashion, etc. For example, we will what is it? Invention of computers made typewriters outdated, like that. We are using all computers only now. In some places only they are using typewriters. The typewriters are outdated now. To some extent, we are using almost computers only. That is improvement of technology. Okay, the changing technologies leads to obsolescence. Obsolescence in the sense economic deterioration of the assets, decrease in the value of these assets. Okay, we will interested in new technological equipment only. Okay, market decline due to change in the taste and fashion. People attracted to new technology and new taste and fashion. For that, old will be outdated. Inadequacy of existing plan to meet the increased business. We want to increase our business. For that, we adopt a new technology for that. Okay. Depreciation is affected by obsolescence as it decreases the value of asset. Okay. The old asset value will be decreased. Uh, for that, we will charge depreciation. The main causes of depreciation. We charge depreciation every year. What are the reasons for depreciation? We will see. Okay, wear and tear. Fixed assets are purchased for use in business. Due to constant use of fixed assets in business for generating income, the value of such asset is decreased. It is called wear and tear. It is main cause of depreciation. This is the main cause of the depreciation. Wear and tear means continuously we will using that asset, fixed asset. For example, weaving machine. Weaving machine will continuously we will use. What will happen if wheels also break sometimes? For that, wear and tear is reason for the depreciation. Depreciation will fixed asset. Fixed assets purchase will purchase assets, but year by year that asset value will be decreased. Passage of time. Every asset has a certain economic useful life. With the passage of time, effective life of the assets goes on decreasing. Okay, passage of time, time changes. If time changes day by day, the asset value also will continues using that asset. It will decrease the value of the asset. With the passage of time, effective life of the assets goes on decreasing. Certain assets like lease have a certain legal life. With the passage of time, value of such assets goes down, even may not be actually used in the business. Passage of time. Okay, once we used assets, that asset value will be decreased. Uh, Otherwise, the asset value day by day, without using also, it will decrease the value of the asset. Depletion. Depletion is the reduction of the natural resources. In case of wasting assets, depletion is also a cause of fall in the value of assets like mines, oils, wells, quarries, etc. We will extract the material continuously. Mines, oils also, it will decrease the asset. Okay, mines, quarries, it's called depletion. We will not mentioned as depreciation. Depletion is the word used for continuous extracting of oil and minerals from mines. Okay. Obsolescence due to invention of new technology, the asset based on old technology may become obsolete and out of date. Okay, new inventions are a continuous process here. Okay, technology is developed, but that the old will be obviously outdated. This is the reason of uh, depreciation. Accidents may also cause a permanent fall in the useful life as well as in the value of assets. Sudden accidents also creates depreciation. Asset will be completely lost forever. No? That's depreciation will be charged. Permanent fall in the price. A permanent fall in the market value of investment is recorded as depreciation. Other assets are depreciated on the basis of its useful life. Okay, permanent fall in the price. A permanent fall in the price value of investments is recorded as depreciation. Investments means shares. We will invest shares. That value will be fluctuating. That is the asset value will be sometimes decreased. Other assets are also depreciated on the basis of useful life. We will measure the predetermine the life of the asset. Okay. Objectives of providing depreciation. To ascertain the true and fair profits, every business organization wants to know the complete true financial position of the organization. For that, actual profit will be known by creating this depreciation and all expenses and losses we will record, and incomes and expenditure also we will record for that depreciation. machine account will be prepared for to know the true and fair financial position of the organization, to show the asset as its asset value by day it will decrease the value of the asset, so that at the end of the year we will know the true position of the asset. To make arrangement of funds for replacement of fixed assets for purchasing asset, we will provide depreciation every year. That with that amount we can purchase new machine further. For that, okay, replacement of fixed assets we will provide depreciation. Okay, but at the asset purchasing time we can use that amount to purchase the assets, fixed assets. Ascertaining accurate cost of production. For every organization will prepare financial statements. They will see what the accurate cost of the production. We will see that accurate cost of production. For that, we will provide depreciation and maintain the accounts to comply with legal provisions. Okay, legal provisions are the if any are there, we can mention in the financial statements. To avail tax benefits. If we not provide any depreciation, we will assume that asset is in complete working situation. That asset will be calculated in the income also, that loss we can't bear for that. For that we will provide depreciation. To avail tax benefits, we will show the depreciation in the accounts. For that we will make benefits from the tax. Okay, factors affecting the amount of depreciation. Assessment of depreciation and the amount to be charged in respect thereof in an accounting period are usually based on the following three factors. Okay, what are the factors influencing the depreciation, affecting the depreciation? We will see the following. Okay. Historical cost or other amounts substituted for the historical cost of the depreciable asset. When the asset has been revalued, okay, historical cost, other amount substituted for the historical cost of the depreciable asset. We will substitute other assets in the place of old assets. For that, some asset value will be revaluated. For that, next arrangement of next new assets. For new assets, we will mention the cost of the old asset. For that, we will provide depreciation. Expected useful life of the depreciable asset. We will expect before only we will expect the lifetime of the asset, fixed asset. But based on that, we will provide depreciation every year. Estimated residual value of the depreciable asset. Okay. Cost of the asset we will find out now. That for that we will any asset purchase we will consider what any installation charges, any scrap value is there. Asset for that we will consider all that to calculate the depreciation. What is the residual value of the scrap value of the asset? We will consider all these aspects to provide depreciation. Okay, historical cost of a depreciable asset represents its money outlay or its equivalent in connection with its acquisition, installation and commissioning, as well as for additions to or improvement thereof. For any asset, if any installation charges are improving the working condition of that machine, we will maintain some expenditure. Okay. The historical cost of depreciable asset may undergo subsequent changes arising as a result of increase or decrease in the in long-term liability on account of exchange fluctuations, price adjustments, changes in duties or similar factors. Subsequent changes arising as a result of increase or decrease in the long-term liability on account of exchange fluctuations, price adjustments, changes in duties or similar factors. Okay, if asset working condition is decreased, we will replace the asset in that old asset. For that, we will maintain some provision for depreciation. For that, we will purchase another machine like that. Okay, what are the long-term liabilities for the company? We will measure. Okay, the useful life of a depreciable asset. We will predetermine the life of the asset. Okay, we can predetermine the life of the asset. The useful life of a depreciable asset is shorter than its physical life. Okay, that life of the asset will be shorter, predetermined by legal or contractual limits. We can predetermine the lifetime of the asset, directly governed by extraction or consumption. Consumption means what we are using the asset in the organization. We can know the asset lifetime. Okay, dependent on the extent of use and the physical deterioration on account of wear and tear, which again depends on operational factors such as the number of shifts for which the asset is to be used, repair and maintenance policy of the enterprise, etc. Okay, we will consider the asset, in what way we are using, shift wise. Okay, shift wise we are using. What is the asset lifetime? Okay, what is the asset lifetime? We can measure before only. Okay, number of shifts that asset is we are using in the organization, repairs and maintenance policy of the enterprise. We will maintain the asset for repairs also. Repairs for some amount will be used for the repairs. For that, company will take care of that. Okay, reduced by obsolescence arising from such factors. Okay, obsolescence means change in the technology. The asset value will be obsolete. Improvement, technological changes, improvement in production methods, change in market demand for the product or service output of the asset. Okay, change in the market demand for the product. For example, new goods will be attracted by the consumers. Further, new technology will be adopted. The old ones will be obsolete, obviously. Okay, legal or other restrictions. Any old machinery, some restrictions will be there. For that, we will replace the new machinery. Okay, the methods of providing, allocating depreciation. Okay, we have important methods. We have as per the Board of Intermediate, we have two methods to provide depreciation. Okay, one is straight line method and other one is written down value method or diminishing balance method. These two are very important methods we are using at present. Okay, other methods also were there previously. Okay, sinking fund method, annuity method, insurance policy method, revaluation method, loose tools, depletion method. Depletion method we will use for mines, oils, wells, etc. Machine hour rate method. These are the methods. Other methods also there, but we are using two methods only. One is fixed installment method, other one is diminishing balance method. Two methods are there. We are going to learn in the class. Okay, next class. Straight line method of depreciation. We have two methods, very important. These are okay. Straight line method. Under this method, depreciation is charged by a given rate of depreciation on the original cost of the asset every year. Every year, we will provide the depreciation on the original cost. For example, we will purchase one asset for plant and machinery for 1 lakh. Every year, we will provide on that 1 lakh only. 1 lakh means 10,000. Every year, we will provide that depreciation. Fixed cost, fixed original cost only we will provide. Due to this reason, depreciation charged annually remains fixed, and so that method is called fixed installment method. We will fix providing of depreciation at one rate only. We will not change the rate also. Okay, depreciation every year we will charge fixed installment method only. Every year it won't be changed. For that we will call as fixed installment method. This is also called original cost method, as the depreciation is charged every year on the original cost of the asset, estimated scrap value of the asset. Every year we will provide depreciation on the original cost only. And, for example, 1 lakh we have purchased. The next year will be that written down value will be 90,000. But we will providing the depreciation on 1 lakh only. For because this is called as original cost method, and that 1 lakh only we will provide. Asset purchased for 1 lakh at the beginning, that 1 lakh only we will provide depreciation every year. Okay, straight line method of the depreciation. If rate of depreciation is not given, then annual depreciation and rate of depreciation is calculated applying the following formula. Okay, if rate of depreciation is not given, we have to find out the depreciation. Okay, we will find out the annual depreciation is equal to cost of asset minus estimated scrap value divided by number of years estimated life. We will estimate the approximate scrap value, and we will estimate the life of the asset. Okay, based on that we will find out the annual depreciation. Okay, cost of the asset. Cost of the asset minus scrap value. Scrap value is a minus. We will minus the scrap value divided by number of years, estimated years. With that formula, we can find out the annual depreciation. Okay, for rate of depreciation, actually we already find out that annual depreciation. With that annual depreciation, we can find out the rate of depreciation. Annual depreciation divided by cost of asset into 100. We are finding out the percentage. For that, we have to multiply with 100. Rate of depreciation is equal to annual depreciation divided by cost of asset into 100. With this, we can find out rate of depreciation. Straight line method of depreciation. When depreciation charged in various years is put on a graph, it gives a straight line parallel to OX axis. Due to this reason, this method is called straight line method. When depreciation we are charging every year equal installments. With that figures we can find out the graph. It will be equal to OX x-axis only, horizontal. Due to this reason, this method is called straight line method. We will providing the depreciation every year equal amounts. For that equal same amount we will providing every year. So it is called as straight line method. If we mention in the graph, we can say it is straight line method. Okay, demerits of the straight line method of depreciation. Demerits means any disadvantages are there, we will see. Okay, unsuitable for long-term assets. The assets having long life requires several addition and extension from time to time. This method is not suitable for them. It is also not suitable for assets having heavy investment. Okay, long term assets, it will not be suited. Okay, suit for providing depreciation. We have to replace the asset time to time. If any asset became outdated due to obsolescence, we have to replace the asset. For that, every year we are providing same amount of depreciation. For that, this repairs also go on increasing day by day. For that, equal amount will be suited for this long-term assets. No provision of funds for replacements. In this method, amount charged as depreciation is not invested outside the business. It is retained in the business and becomes a part of working capital. Every year we are providing depreciation, provision for depreciation, but it will remain in the company only. It will remain in the business only. We are using for working capital only. We are not investing that amount to in other businesses. For that, we can't replace the funds immediately. When the asset becomes useless, the firm has to face the problem of funds for the replacement of asset, as it becomes difficult to withdraw amount from the working capital. If we include the amount in working capital, it will become difficult to withdraw that amount and replace the new asset. For that, demerits of straight line methods. One more is the interest factor ignored. When a fixed asset is purchased, the amount is invested permanently. If the amount would have been invested outside the firm, the interest would have been received on it. Thus, the loss of interest is ignored while calculating depreciation. When a fixed asset is purchased, the amount is invested permanently. Asset purchase means we will pay the amount. That amount will be invested permanently with that asset only. We can't invest that amount in some other business and we can't get the interest on that amount. Okay, undue pressure in later years. Under fixed installment method, the total charge against the income goes on increasing year by year, while efficiency of asset goes on decreasing. Year by year, the asset value will be decreased. The efficiency of the asset will be decreased. Thus, the pressure in later years is unduly high. It will face so many problems for that. So many problems we will face. The asset will work slowly. The working condition will be decreased. Okay, difficult to estimate scrap value also. Unequal charge against income. Total charge on account of using fixed assets comprises depreciation plus repairing charges under a straight line method. Depreciation charge is fixed, but repairing charges go on increasing year by year. The total charge against income goes on increasing. Okay. Depreciation we are charging that repairs rate of repairs also increasing. For that we are charging only equal amount 20,000 only, but repairs amount will be increased as the asset working conditions. Okay, rate of depreciation will be equal. The return down value will be changed. Here we can observe in these figures. Okay, the return down value goes on changing, but rate of depreciation is same every year. Depreciation also same. In return down value, we will make a we can observe the changes. In the straight line method, we can't provide the depreciation on return down value. Original cost only we are providing the depreciation. This is the one of the demerit of the straight line method. Okay, annual. One example we will see cost of machine 77,000 useful life of the 5 years. Estimated scrap value for 5 years 31,250. Okay, annual depreciation we have to find out. What is the cost of the machine? 77,760 minus scrap value. Scrap value 31,250 divided by lifetime. Okay, lifetime it will give some amount, that is the annual depreciation. Rate of depreciation means with this cost of depreciation we can find rate of depreciation. Cost of depreciation divided by the rate of depreciation is equal to annual depreciation divided by cost of the asset into 100. We will find out that percentage of the rate of depreciation. Okay. Okay, we will conclude today. Okay. What we learned today, depreciation, what is the depreciation, causes of depreciation, what are the factors affecting the depreciation, methods of providing depreciation. Okay, today we will conclude the class and we will meet next class. Okay, thank you.